G'day everyone, and welcome back to this Share Cafe Hidden Gems webinar. We always appreciate your time on a Friday. Today we are talking battery minerals, we're talking gold, we're talking beer, one of my favourite subjects, and we're also talking medical technology. It appears today we're in a bull market for the day anyway, so enjoy a strong equity market. Don't forget to ask questions in the box provided. Type your details in there and we'll make sure that those questions get answered either live or get one of the CEOs to type answers in directly. Okay, we're going to make a start straight away. We have European Metals to kick off, ASX code EMH. It's got a market cap of 145 million. We have with us Keith Coughlan, who is the Executive Chairman. If you don't know the company, European Metals is an Australian and UK listed mineral exploration and development company with a clear aim to create a sustainable European lithium supply chain with a low carbon footprint. Keith, always good to see you. Thanks for your time.
Morning, Tim. Thanks very much. Good to be here again. So if I can click straight into it, which I can't see on my screen. Okay. And following our disclaimer, we have to move fairly quickly. We only have 10 minutes. But European Metals is developing the largest hard rock lithium resource in Europe, the Cinovix project. We're developing that in conjunction with our partner, CEZ, the Czech National Power Utility, who's a 17 billion euro market cap company listed across Europe. The most important distinction, I think, for European Metals from many of the other lithium stories that viewers may be aware of is that our plan is to go right through to battery-grade chemicals. That is, we will produce battery-grade lithium carbonate and battery-grade lithium hydroxide directly into the automotive market, directly into the battery market. And that's slightly different to most of the spodumene concentrate stories you may see here. It's a very, very big resource, as I mentioned. We have over 7.5 million tonnes of lithium carbonate equivalent in the ground. That makes it the 5th largest hard rock lithium resource in the world. And that size is very important because it goes to long-term security of supply. As you'll see down the left-hand side of this slide, the economics are very strong. We have a post-tax NPV in the project of almost $2 billion and a post-tax IRR in excess of 36%. And I'd like to point out that those numbers were calculated using a lithium hydroxide price of $17,000 a tonne. And of course, it's significantly higher than that today, something above $80,000 a tonne if you're looking at the spot price. The company and the project are fully funded through to our final investment decision expected in about 12 months' time. If I could have the next slide, please. Now, a very big part of why we believe this project will be very successful is that we are situated in Europe, in the European Union, and the European Union is fully committed to developing a battery industry, fully committed to an electric vehicle future, and has recognised the need to help support the development of the critical raw materials, the battery metals such as lithium, within the region. And you'll see from this slide there's been a significant contribution to this thematic, mainly in terms of funding, €1 trillion committed to the green energy deal, which is largely about batteries, electric vehicles, and sustainable energy. And so that makes it very supportive of projects like ours. And if we look at the next slide, we'll see why they are so supportive. If I can have the next slide. Thank you. So if you look at the 3 of the main markets across Europe, Germany, France, and the United Kingdom, if you add up the numbers of all of the types of electric vehicles, not just the EV number given at the bottom there, but all types of electric vehicles sold across these markets in September, you're approaching or exceeding 50% across all 3 of these major markets. That is, half the cars, or nearly half of the cars sold in these markets in September was some form of electric vehicle. So we see that great demand for electric vehicles, great demand for batteries, and therefore great demand for lithium. And in Europe, there is no current production of battery-grade lithium. So you have enormous demand, no local supply, and that's why our project is getting significant attention within the European Union. If I could have the next slide, please. The project has ideal location. If you look at the key factors of what makes a great mining project, you look at size, which is something we have. You look at the location, and here you can see where we're located, the star in the middle of the screen. If you look at the lithium demand in this region of the world, it's going to grow enormously over the foreseeable future. The number at the bottom right there from the Fraunhofer Institute, they predict there'll be 1.3 to 1.5 terawatt hours of battery capacity built across this region between now and 2030. And that requires more than double the total amount of lithium that was produced in the world last year. So you can see the enormous increase in demand. Next slide, please. It's also interesting to note who's going to own this battery capacity across Europe. You can see on the left-hand side of this slide who the main battery players in Europe are this year. And then out to 2030, you see how rapidly it changes to involve car manufacturers, the new battery manufacturers springing up in Europe. And so those traditional sources of battery metals, and in particular lithium, will need to change. The next slide shows projections of the undersupply, that is the gap, the deficit in lithium supply going out to 2030. And this is why we're seeing such strong prices for the metal. And if we look at the next slide, we'll see why Synovitz is so important in the European Union. If you added up all of the hard rock lithium projects in the EU, you can see that Synovitz accounts for over 65% of that total. And as I say, that's important for long-term security of supply. It's also important in terms of focusing the attention of the EU on our project. Next slide, please. We made an announcement last week, at the beginning of last week, about our updated optimized flow sheet. We're very happy with this flow sheet. It not only gives us very, very pure lithium products, both lithium hydroxide and lithium carbonate, but it also represents a saving of 10 to 20% on both our CapEx and our OpEx in the lithium processing plant. And that's very important for the economics of the project, which, as I said earlier, are already very strong. The next slide, please. This is the optimized flow sheet. As you can see, we can not only produce battery-grade lithium hydroxide and battery-grade lithium carbonate, but we also have the option of selling intermediary products such as lithium sulfate and lithium carbonate. Both of those chemicals are becoming more interesting and more important in the battery supply chain, and there are a number of large companies in the world who are looking to buy these products. Next slide. This is a historic underground tin mine. Tin has been mined here since 1379, so there's a very long history of mining in the region. That's important to us from a number of perspectives, but with regards to our ESG profile, and ESG is obviously becoming more and more important in the eyes of the world, but it's from an ESG perspective, re-entering a historic underground mine obviously is a lot easier than if we were trying to break new ground, start a new mine from scratch in Europe. So it has a lot lower impact on the environment, a lot lower impact on the community. And we've gone to a great deal of trouble to ensure that our ESG credentials are very strong. If you look at the next slide, we commissioned a study from Minviro, a global independent advisor, into the global warming potential or the CO2 footprint of the Synovitz project. And you can see from the second bar on this slide, our optimized case, that is when we provide green energy to the project to run the project, and our partner CHES is able to do that. They're able to provide us with solar power to run the project. You can see that Synovitz has the potential to have one of the lowest impacts on the CO2 levels of the world of any lithium project anywhere in the world. Next slide, please. These are the highlights from that PFS update that I mentioned that was done earlier this year in January. You see that we are able to produce a ton of battery-grade lithium hydroxide for less than $6,000 a ton. And if you compare that with the current price that I mentioned earlier, somewhere around $80,000 a ton, you see that this project has a very strong potential to have enormous margins. Now, this is a very large resource, as I mentioned, producing 30,000 tonnes or just below per annum of battery-grade lithium hydroxide for 25 years, uses less than 10% of the overall resource. And so at some stage in the short term, we will look at doing an expansion study to see exactly how much we can produce of battery grade chemical each year and take that number up from the 30,000 odd tonnes that's shown there. The next slide. So this is where we are in the journey. We are in our definitive feasibility stage. We expect to conclude that next year, and we'll be able to finalise the anticipated date of that. We then expect to move directly into final investment decision. We've begun discussions with potential financiers of the project, and in the current environment, we have the current strength in the lithium market, the current support that we're seeing from the European Union and European member state governments. We believe funding the project won't present any problems to us. With this new flow sheet that we've now finalised, we'll move into a pilot plant study, which will enable us to produce some significant samples of battery grade material for us to provide to our proposed offtake partners. We'll be able to advance those offtake discussions and ensure that we have very strong offtake and very strong offtake partners as we lead into that definitive feasibility study and final investment decision. If we look at the next slide, we made an announcement just yesterday about the appointment of another senior lithium specialist to our team. We're building this team out rapidly. What you see here is the team that's provided by European Metals to the project, but our joint venture partner, CHES, provides significant HR resources as well. They're a very large company, as I mentioned earlier. They employ about 35,000 people in the Czech Republic. So between us, we're putting together a very strong owners team, a world-class owners team to help develop a world-class project. So in short, we're developing the largest hard rock lithium resource in the part of the world in which the demand for lithium will grow quicker than anywhere else in the world, and in which there is no current production. Thanks very much for your time, and I look forward to taking some questions.
Thanks, Keith. Just on Mark Rowley, can you just probably elaborate a little bit more what he brings to the table, given his recent appointment?
Certainly. So Mark's been involved in the development of two lithium projects that you may be aware of, the 5-inch project, Woomera in Mali, but also the Altura project here in Western Australia. And finding, because the lithium market has grown so quickly, and, there are some very, very big companies now in this space spending a lot of money to bring projects on as quickly as possible. Because of that, it's actually not easy to find people like Mark globally who have this sort of expertise. So very, very happy to have someone like Mark join the team. And it's also not just about, finding someone of Mark's caliber. It's about attracting them to the project. So I take it as a vote of confidence in our project when someone like Mark and other members of our team who, could really find employment in any lithium project anywhere in the world would choose our project and have the confidence that we have in the development of this project.
And of course, the US government's been involved in announcing some grants just recently. What role do you think the EU could possibly play with your project?
So I think the EU will ultimately play quite a significant role. But Europeans have traditionally been quite conservative, move a little slower than we see other nations, in terms of this sort of space. And we have to remember that in recent times, mining has been something that's not been conducted in Europe on a large scale. Europe has largely outsourced its mineral requirements to other parts of the world for some decades now. And it's only a fairly recent development where the Europeans have realised that this is no longer a viable option. That's possibly come about by things such as COVID, highlighting the dangers of global supply chains, but it's probably also come about a little recently, Tim, from this global anti-China sentiment that we are seeing. We've seen President Biden announced just 2 weeks ago a commitment of $2.8 billion to lithium development companies in the US. And I think it's something that we'll see the European Union, European Commission copy. There's already a lot of potential grant money available across the EU for projects like ours. It's a matter of seeing how the legislation and the macro granting of that money is now translated through to providing money on the ground to projects like ours where we can use it.
And of course, Keith, the auto industry is big business in the Czech Republic. Can you talk about the importance of the industry to the broader EU and obviously to the Czech Republic, and how may they play into your hands?
Certainly. Well, firstly, from the point of view of the Czech Republic, you're right, the automotive industry is very important. It accounts for a little over 10% of Czech GDP. The Czechs, I believe, make more cars per capita than anyone else in the world. So it's a big industry there, and it's an industry for which the Czechs are very proud and parochial. So there's a lot of cars made in the Czech Republic for companies like Volkswagen, also for Korean companies. So, we are right in the midst of it in terms of providing lithium to that industry. In fact, our partner CEZ and the Czech government have announced plans to build a battery factory at a site that's only 50 or 60 kilometres from our project. So, local supply chains. Within Europe as a whole, there's obviously an enormous amount of vehicles made. Just across the border in Germany, you have some of the world's largest automakers, Volkswagen, obviously, but Mercedes, BMW, etc. And then in broader parts across the rest of Europe, you have Stellantis, but you have a number of cars made for other car companies from different parts of the world as well. So, and that's why we're seeing an enormous increase in the demand for batteries, for lithium across Europe, because of the number of electric vehicles that are anticipated to be made in the region in the next few years.
And Keith, just finally, you touched on your PFS, which has got a lithium price of $17,000 a tonne. I think you said it's trading near 80,000 now. You've of course got inflation that's playing a role in costing these projects, and you've got a resource where I think you said you're only including 10 or 13%. When and if will you update this PFS and announce that to the market some stage next year?
Well, the PFS will be updated by the DFS, the definitive feasibility study. It would be nice to run new numbers at current prices, and notwithstanding the increase in inflation that you mentioned, which is very real. But I think we've offset that potential capital increase with the new flow sheet. And I mentioned the CapEx and OpEx savings that we've brought to bear with that new flow sheet. You can't just run part of a PFS number to get a new NPV that suits you. You've got to run the whole process all over again. There's an enormous amount of work involved in doing that, which would distract and detract the team from the job at hand, which is to deliver the DFS. When we published that PFS update in January, we did add in there a sensitivity analysis so that people could select a lithium price that they thought was long-term sustainable, plug it into that sensitivity analysis and understand what significant increases in the lithium price does to the NPV of the project. But fair to say that if we ran those numbers again today, we would expect a much, much bigger number, not just a small incremental increase.
Keith, that's all we have time for. Thanks for your time. Always good to see you. Have a nice weekend.
Thanks, Tim. You too. All the best.
Next up, we have Mighty Craft, ASX code MCL, market cap around $77 million. We have with us Mark Haysman, who is the Chief Executive Officer and Managing Director. Mighty Craft is one of Australia's leading and fastest growing premium craft beer beverage companies, enabling craft companies to scale production, distribution and sales. Great to have you on the program, Mark. Over to you. Thank you.
Yeah, thanks very much, Tim. Welcome, everyone. Great to be here today to share a bit of the story around Mighty Craft. We'll be listed 3 years in a month's time. And it's been a big 3 years coming straight into COVID, and the business has recovered really well and starting to really hit its straps. So perhaps we could just move through to the next page. So we are the fastest growing booze company on the ASX. So a couple of the brands there for you to see. So Better Beer, obviously, which I'll talk about more shortly. 78 Degrees Spirits out of the Adelaide Hills, Seven Seasons, which are an Indigenous back brand, and then some of the other brands over there on the right, but really about simplifying from here on in, really focused with a clear strategy to achieve our ambition in FY25. Next page, please. So yes, we talked about the growth and the diversification of our portfolio. So we are the only listed beverage company on the ASX that does give that exposure to not just beer, cider, RTDs, but also to white spirits and dark spirits, in particular whiskey, which you can see that we're bringing to market now. The Better Beer brand and business has been the biggest beer launch since 2014. It's been huge. Again, more on that later. We're starting to see now a real rebound post-COVID. So some tailwinds around venues and the on-premise, which has been a couple of years in the making. And we're very much a defensive category play. So I think I've done over 25 years in beer and spirits, and definitely beer has been recession-proof through the journey, and certainly proving that that will be the case going forward if we see a downturn in terms of the economy and the pressures that we're seeing at the moment. So really well positioned in terms of going forward. Next page, please. So we have a big ambition. There's no doubt about that, to be one of Australia's leading craft drinks businesses, and to do that across both of those categories with a lot sharper focus now in terms of the priority brands across beer, cider, RTDs, as well as spirits. As to how we do that, next page, please. We I guess have to just flag that we have made a bunch of investments in different businesses and brands since we kicked off 4 years ago. We do move through that investment cycle, as most of you on the call will, whether it's your own portfolios or whether you're managing big businesses yourselves. We're sort of very much in that portfolio management stage now, where we've integrated these different businesses, brought them through, accelerated their growth, really starting to drive to scale now and bring the efficiencies through. But some of those earlier stage businesses we did invest in, probably not going to get to the scale that we thought they may. And as we've got more scale into our business over the last 12 months, starting to see the benefits of that come through and drop through to the bottom line, not just the top line growth. So we are in that portfolio management stage now, where we'll start to cycle out and rationalise the portfolio over the next sort of three months to 18 months. Onto the next page, it does show you our ambition. It's a lofty ambition. You can see there for FY22, we set a fairly aggressive target for ourselves that we did share with the market early in FY22. So 8 million litres of beer, cider, RTDs, 250,000 bottles of spirits for FY22, and then whiskey at 300,000 litres. We achieved all of those numbers. We've now set an ambition for FY23, again, next level of scale up, which will see us very well placed to hit that FY25 ambition. And to give you a sense, a business like Stone & Wood, which is a great beer business out of New South Wales, when that was recently acquired by Lion, they were doing about 17 or 18 million litres in their own right. And it's understood that that was acquired for around 500 million. So it gives you a sense as to the value that we're creating within these businesses that are probably not reflected in terms of our share price currently. On the next page, you can see some of the key businesses that we do have, varying ownership stakes. You will see one of the themes going forward is that we really starting to simplify the portfolio and where we can, take a 100% position in these businesses. So within beer, cider, RTDs, you can see that the 4 key focus brands going forward. Better Beer, obviously the one that's delivering the bulk of that scale. But each of those other brands performing well and growing strongly as we have on a year-to-date basis in FY23 as well. From a spirits perspective, again, varying levels of scale there, but some wonderful brands, highly differentiated, and most of them 100% owned. So a big ambition, most of them with production facilities of their own, and Better Beer is the exception there, where it's a capital light model where we produce up at Casella's brewery in Griffith. They do a great job for us and keeps us, in terms of that business, profitable, capital light, and able to sustain the growth that we're seeing at the moment. Next page, please. Certainly one of our strengths in the market, and this really helped us during COVID, our signature strength really in terms of wholesale, sales and distribution. So what that means is our ability to work really well with the more sophisticated trade in the country in the off-trade. So whether that's Dan Murphy's, BWS, whether it's Coles, the big independent groups like ALM and IBA, but then in the on-trade as well, ALH and ABC. So we've really grown our distribution points strongly. You can see that trend. Q1 23, again, an uptick again. So real strength there in our ability to, I guess, on our demand-led business strategy, which is to work with our key customers, help understand what their needs are, what problems they're solving for, and work with them to create a solution to that problem. And a really good example of that is Better Beer, that we sort of co-created with the likes of Dan's and BWS, the two biggest retailers in the country, and the Inspired Unemployed, and the growth of that has been phenomenal. Next page, please. So Better Beer, onto that. It has been a huge launch. So the main product there, of course, is the lager, which is on the left-hand side. So 0 carbs, 0 sugar. So it's a great product with relatively low calories as well per serve. It's a huge addressable market because this is really entry-level craft. It's disrupting mainstream, and it's basically taking share directly from the big mainstream players. Whether that's Great Northern, whether it's Pure Blonde, Hunt Super Dry, it's taking share from that category, which means it's an enormous growth opportunity in terms of a big addressable market. It's been digitally led in terms of the launch. Inspired Unemployed, Matt and Jack, with Nick Cogger doing all the marketing and driving that. And obviously, it's right on trend in terms of that better for you moderation trend that we're seeing as a real key driver of consumption in Australia at the moment. It is the most followed beer brand in the country. So from an Instagram perspective, it's got over 100,000 followers now. So within 12 months of coming to market, has sort of gone ahead of the likes of Stoner Wood and Bolter in terms of the engagement. So the engagement of this brand with the drinkers is just phenomenal. And then the scan sales down the bottom right there really give you an indication that it's scanning on an increased rate as every week goes by. And biggest week of the year was the grand final week, which you can see on the right. So really strong performance in terms of sell-through. It's a brand that's already bigger than Bolter, which sold out for about 200 million. So the value we're creating within this business is huge, and that momentum coming into summer, we expect to see really, really strong performance from this brand. Over the page, just a quick update in relation to the quarterly that we released, a few weeks back. So it was a very tough quarter for the category. Overall, the category was down around 6% for Q1. We grew very strongly against that, around 75% in terms of wholesale. So we grew share again, which is a trend in terms of how strongly we're disrupting the market. Our operating cash, the hardest two quarters for us are Q4 and Q1. They're behind us now. So that operating cash, we're starting to see that really come through strongly now through Q2, Q3. We're seeing a very strong rebound out of COVID for the on-premise and our own venues. So, plus 75% versus the same period last year. Strong cash balance, and we're well and truly on track to deliver those volume commitments that I referred to earlier in the slide pack. We did have a record month in October, biggest ever month, and we're on track to beat that again in November. And as you would normally expect, December, January should be significant months as well as we come into that peak trading period. And one of the things that we've really talked about is focus. And there will be some divestments of some of the non-core businesses going forward that will start to free up some of that capital to bring back in and support the growth of our priority brands going forward. Next page, one of the themes you'll hear us talk about more as you see more of our story. Definitely fewer, bigger, better. I think that focus becomes really important to capitalise on the biggest opportunities that we have in front of us. So for us, really driving from here to not just growth, but profitable growth. Done a lot of work on our cost base. We made a bunch of changes at the back end of FY22 that resets our overhead base to start to see operating leverage come through really strongly during the current financial year. The acceleration of Better Beer and access to export markets now. So we are in New Zealand and just launched over there through DB, who are owned by Heineken. who are taking on the distribution over there. So looking forward to seeing really strong results from Better Beer, accelerate the spirits portfolio and access export markets for those brands, get our whiskey program really going, and manage our capital carefully, keep working on our divestments where they don't fit that real sort of focus on priority brands at scale. And pleasingly, we're seeing really strong rebound out of COVID, which has been obviously had a huge impact on our business and probably set us back 12 months. Now starting to see those benefits come through of the on-premise channel and our ability to convert consumers in our own venues and do so profitably. So a lot to look forward to, but very much trying to simplify the agenda, Tim, going forward.
Thanks, Mark. You won't believe it, I'm actually on TikTok and I follow the, what are they called? The Inspired Unemployed. I didn't realise I did. And so with a group of two young guys like that who are hysterical, 1.5 million followers, I was just having another look. Do you create a brand around distribution? Is that, in the future, is that part of the strategy to find these big distribution channels and do a deal and create a brand with that?
Yeah, I think certainly with Better Beer, it's a great example of us, again, with our entrepreneurial spirit, looking for the right partners to build different brands. So, working with those boys has been fantastic and certainly a very different way of launching a beer brand. So I think going forward, the opportunity is obviously to keep growing that really strongly, but look at other opportunities potentially to disrupt in other segments, maybe within spirits or the like, with the right partners. And Matt and Jack obviously have equity in the game. They drive it really hard, very creative, very hardworking actually as well. But yeah, very funny guys and fantastic to be working with them. And they do the marketing and the socials. So that's with them. And we do the sales and distribution for them. We have a 7 or 8 year agreement with them to do that. And obviously,
sorry, my 19-year-old son buys their beer. So does he do that online, or does he go to the local bottler and pick it up there?
Yeah, go to the local Dan Murphy's or BWS, or you can buy it on tap as well. It's available through the on-premise more broadly. Been really supported well by Dan's and BWS. That's your best spot to find it.
Okay, and there's a question here on your $9 million in sales in October, which is a big number. What was the net operating cash flow for October?
Yeah, look, we're still, obviously finalising the month there, but in terms of from a cash generation, it was very positive. We're starting to see really strong cash generation over Q2, Q3, and into that positive cash generation going forward, which obviously is a big milestone for the business.
And I think you mentioned something about owning your own venues. Did you? Can you give us a bit more colour on that?
Yeah, sure. So against our breweries, we have brew pubs attached to those. So, for example, Jetty Road in the Mornington Peninsula has a wonderful brew pub attached to it, which is growing strongly, profitable. Mismatch in Adelaide has a brew pub as well in the CBD, and our distilleries have cellar doors attached to those as well. So very much like Four Pillars has its own cellar door attached to the distillery at Hillsville. We have a wonderful cellar door up at Lot 100 near 78 Degrees, and at Kangaroo Island Spirits as well. So for us in our own venues, I think that's a great attribute to be able to bring consumers into our own experience and for them to really enjoy that and obviously capture them and do that profitably.
And it's a hugely competitive space. I mean, you go to the pub now and there's so many beer choices. Do you think it's almost too competitive? It seems like it's less about taste now, more about brand. Do you see that playing out?
I think what we're seeing is, the premiumisation trend is well and truly alive, Tim. I think people are keen to support local. That's definitely important to people, and they want to support the backstory of the local brewer or distiller. But yes, there is a lot of choice, and I think the ability to stand out on shelf is important, and hence the ability of our sales and marketing team to do a great job with our biggest customers to make sure our brands are available, firstly, and secondly, stand out. And then if we can market them in a way that's a bit different, like we do with Better Beer, we find that cuts through very well. But yes, it's increasingly competitive, and we probably expect more consolidation going forward rather than less.
Great, that's all we have time for. There's a couple of questions online, if you don't mind, if you've got the time just to type in some answers, be appreciated.
Great.
Thanks, Mark.
Thank you very much.
Okay, next up, we welcome back LBT Innovations, ASX code LBT. We have Brent Barnes with us, who is the MD and CEO. The company is a groundbreaking designer of advanced technology solutions for the medical industry. Brent, always good to see you. Over to you, mate.
Great. Thank you, Tim, and welcome. Look, it's a pleasure to update you on LBT Innovations. We are a commercial stage biotech company, and we are absolutely leading the way with respect to bringing this microbiology discipline up to the 21st century. And we're doing that through really digitizing that effort and automating the workflow. So the opening slide talks a little bit about, kind of the technology and what it is that we're doing. So next slide, if you could, or the first slide. Perfect. And I really like this opening picture because this picture is from a Sonic lab in London, the Health Services Lab, very prestigious lab. They've purchased 2 of our instruments. So the reason I like the picture is because it gives an immediate sense, I think, to shareholders that we've got a product. We've gone through the regulatory approvals. We've really de-risked that product development category. And really, principally, the IP around the technology is a machine vision platform. And so what we do is that the instrument takes a photo of the agar plate, and we've trained an algorithm to interpret real time what grows on that plate, and importantly makes a clinical diagnosis. And so what it means for our labs is that we're able to remove the majority of plates that don't have growth or don't have significant growth out of the workflow automatically, so makes an autonomous decision without the involvement of a microbiologist, leaving just the positive plates that need to have some identification and antibiotic susceptibility testing done. So really the whole play here is an efficiency gain to laboratories, freeing up the time of microbiologists. We are generating sales. We've launched the product here in Australia, but really acutely focused on the big markets being the US and then parts of Europe. Next slide just talks a little bit about kind of the size of the area that I'm talking about. And so, clinical microbiology, which is where our focus is a large market. And one of the really key indicators here is a shortage of resources. There are simply not enough microbiologists going through the university systems. So there is a labor shortage. And when there's a labor shortage, you have an increase in costs. And we see this kind of generally, but even prior to kind of coming out of COVID and everyone's short of labor, this was the case for the last 5, 6, 7 years. So, at any one time, 10% of microbiology jobs are vacant. In the US, the average salary of a microbiologist is $150,000 to $180,000 US. So again, you talk about automation, the need for automation and what is a very manual process. There are really key and important drivers that require automation within this workflow. And the picture here gives you an idea of what happens everywhere around the world. So there is no predicate for what we're automating. The predicate is a scientist sitting at a workbench, like on this picture, holding a plate and reading it. So they look to see if any bacteria is growing, and then they'll manually key in the result of that into the laboratory information management system. So there is no other technology that automates what we're doing, and that's why we are leading the way to disrupt this market. And it's really, really exciting in that we're now at a commercial stage and making commercial progress. Next slide kind of talks about our journey, where we are a company that, it's taken us longer than we expected, and it certainly cost us more than we expected to. And I think, I say that in the context of the value proposition for investors and shareholders today is extremely compelling, given where we're at in that technology journey. And so this kind of outlines where we've come from, focusing on the technology roadmap and where we've got to where we are now. And so we've done the 10,000 patient clinical trial, our pivotal study to get US FDA clearance. So we're clear to sell in the US. There is no other product, again, that automates culture plate reading. The predicate is a manual culture plate read like you saw on that previous photo. So our instrument automates that. And the whole idea is that you now have a technician go to our instrument, load up the instrument with all of these Petri dishes or these agar plates. They start a session and then they walk away. And what APAS does, our automated plate assessment system, is it moves plates from the instrument onto the left-hand side to the right-hand side, taking an image, autonomously making that decision, and then triaging those plates that don't have growth. And those plates that don't have growth are discarded. They're removed out of the workflow automatically. Again, just leaving those positive plates that need the ID and AST work. And we've got a portfolio. I mentioned urine, but it's not only urine screening. We have MRSA, which is golden staph identification, and we're working on an AST module. And I'll talk a little bit about an exciting new development moving into the pharma space in clean rooms. So look, technology is done and we're in market. Next slide talks about the market opportunity and what that looks like. We've launched in 5 key countries. So that addressable market's about 2,000 labs. The global market opportunity is about 13,000 labs. We've got big names behind us. Thermo Fisher Scientific are a huge global company, as well as Beckman Coulter. And there's a synergism between their products and our product. And so in the case of Thermo Fisher, who have about 60% market share of the media, that's the plate, well, our instrument automates the reading of their plate. And for similar reasons, but similar in context of having products that are complementary, Beckman Coulter have a number of instruments that they call workstation automation as part of the workflow, and APAS fits really nicely in that. The way the product is sold, there's a CapEx, so you pay $300,000 US for the instrument, the kit, the bit of hardware that you can see. Then there's an annual software license. This is for the algorithm to interpret what the various plates and the specimens on the plates are. So that's, if you like, your annuity. That's your consumable. It's a software license. You can't opt in or opt out. You need to have the software license, and it's typically sold on a 5-year contract. And so that's how when you kind of consider, when you sell an instrument, the total opportunity there is $450,000 US dollars. And we're appointing a distributor. So Thermo Fisher in the US as an example, and they're our arms and legs. They've got the brand reputation that all of our customers understand and know. And it's one of these situations where they're not only the big company and the big brand, but in their first 12 months of being appointed, they've purchased 5 instruments, which is really good considering a sales cycle of typically kind of 15 months. So they're kind of overachieving in that first in the first 12 months. Look, next slide talks, I think, about the journey of where we've come and the inflection point that we've created. And look, it is largely driven through the traction in the US market. We've sold 7 instruments calendar year to date, and weeks, and you can clearly see that's a step up change. The last 2 years have been extremely difficult for us because effectively our customers, who are hospitals or private laboratories, have been shut off. They've been completely consumed with COVID testing. Now that's clearly opening up. And I think you can see now that's being demonstrated through sales activity going into, or as we kind of close out this 2022 calendar year. And we're expecting another step change as we move into the 2023 calendar year, growing that sales and install base. Next slide talks about a great new opportunity of microbial quality control testing. So this is not clinical, this is non-clinical, if you like, or it's environmental monitoring. So if you think of drug manufacturing, drugs are manufactured in a clean room. Part of assessing the hygiene or the cleanliness of the clean room is putting a culture plate inside the clean room, and they rotate that every 4 hours. It's then incubated for a number of days, and you have scientists then looking at that plate to see if there's any environmental bacteria or bugs growing on the plate. And if you think about it, it is perfect for our product because clean rooms are meant to be clean. But it's an extremely important quality assurance and quality control method of ensuring that those batches of drugs that are manufactured under that clean room setting are actually fit for purpose, and the environmental monitoring is in place. And so we've finished a proof of concept work, and we've been appointed by a multinational pharma company to kind of do that work. We've done that. The performance is really good. It's a very big, attractive market. You kind of think of the big top 20 pharma companies have about 600 odd manufacturing sites globally. And we see this kind of being a bit of a situation where you validate it at one of the sites and very quickly you see adoption. So, a really exciting opportunity again, and we hope kind of the near-term catalyst milestones will be to uncover and name who this pharma partner is for us. Next slide gives a bit of an idea of where we're at from a share graph perspective, and cash at bank, we've got 4.7 million of cash and receivables, and burning about 2 million or 2.1 million per quarter. We had our first break-even quarter actually for the company last quarter, and that really kind of represents the receipt of monies coming from the number of sales that we had out of the US. Next slide talks about the rights issue that we've got currently active. So we have lodged and are seeking to raise up to $3.5 million. I won't go into all of the details, but obviously there's a prospectus. All of that information is disclosed. It's going to existing shareholders, and any shortfall that might exist out of that, we'll look to place as part of that shortfall kind of opportunity the company has. So look, finally, and just wrapping things up here, there really is no better time to be in the diagnostic space. We've got a technology that is de-risked. We've got a product in the market, and we've got really big companies behind us. It took a year for these big companies to go through all of the due diligence to make sure that there was product market fit. They did voice of customer feedback. So, we've got a product that's fit for purpose. We've got a growing install base. And coming out of COVID, the sales traction, that inflection point that you can see there, we expect to continue going into next year. And look, I can't stress the excitement around this pharma opportunity, this new vertical. And we see probably, it's quite likely to have a product in the market within 12 months, because there is no hardware changes. It's using the same hardware platform and really developing just a new algorithm, a new piece of software that does the interpretation for a new application. So I'll leave it there, Tim, and hand back to you.
Thanks, Brent. A couple of questions coming through. Have you kind of pivoted in terms of your product suite and where your focus is? Obviously, the company's been seriously impacted by COVID. Has the kind of the recent sales come from a pivot in your kind of product suite?
Yeah, I'd say, look, it's probably less about the product suite and more about the commercial relationships we've been able to establish. And so, 12 months ago, we signed an exclusive distributorship with Thermo Fisher Scientific in the US. And, it's the same product, but we've got a channel partner who's got over 100, feet on the ground, has a brand reputation and trust with our customers. And it is a sales cycle that is 12 to 15 months. And so we've benefited from having, all of that presence in the US. We've got one person in the US to manage the channel and be part of that process as well. We're not trying to do it all here from Australia, and that's really important as part of our commercialization plan. So I'd say it's more about getting the commercial partner in place. And I'd say the first 12 months, we'd characterize or reflect that it's been quite a successful first 12 months, given the sales cycle and given the traction we've seen through Thermo Fisher.
Yeah, I think I read the other day there's big pharma sitting on about $300 billion in cash, right? So to have a relationship there is not easy, and it does take time. You have mentioned kind of big pharma, but you haven't implied who. Will there be at some stage? I mean, what are the steps to kind of finally name that partner in future?
Yeah, so look, they've engaged with us to do the proof of concept. We finished that work, and I think it's reasonable for shareholders to think what we're doing now is trying to firm up what that would look like in terms of developing the technology. And part of that will include, we're obligated to name who the company is. And so there's a little bit of, big companies not wanting to say a lot, but also at the same time, trying to get an agreement in place that best reflects the interests of our shareholders in our company. At the same time, obviously needing to provide some commercial sense for the partner. But look, it is an exciting opportunity. We hope that's in the fairly near term that we can get that into the market, because it'd be great just to be able to talk a little bit more openly about it.
And Brent, just finally, you did have a cash flow positive quarter. Congratulations. What was driving that? I assume that's sales. And what is the kind of sales pipeline? What could the sales pipeline look like into future quarters?
So the last quarter was absolutely sales. Yeah, drove that. So that was really through Thermo Fisher in the US. Look, this quarter we've already disclosed we've had the R&D tax incentive come in, and so that's really positive. So we're kind of probably expecting this current quarter to be close to that break-even point, and then kind of moving into next year. We are expecting that step change up in sales. So, we haven't put that forecast out there, but I think we've got some positive signs just around cash management and kind of looking and understanding the importance of getting to that kind of cash flow break-even point, which is really the primary focus of the company over the coming time.
Brent, thanks for your time. Have a nice weekend. Good luck with the rights issue in the market.
Thank you, Tim. Take care.
Next up, we have Wamura Mining. WML is the ASX code, market cap around $11 million. We have with us Jason Livingstone, who is the managing director. The company is a mining exploration company with the minerals tenement portfolio perspective. They're focusing on battery minerals and gold in WA and SA. Thanks for your time, Jason. Over to you.
Thank you very much, Tim. And thank you to my predecessors. The previous presentations, they were fantastic. Thank you. Thank you very much, everyone, and thank you for attending. My name's Jason Livingstone, and thank you for this opportunity to actually talk about Woomera. Next slide, please, Alex. This is just a standard disclaimer. Yep, cool. No worries. Let's go into this one here. This is our corporate snapshot. Quite a small board, quite a small team. And yeah, we have, next slide, please. A rights issue underway, which closes early next week. And this is a great opportunity to potentially talk to my shareholders and potential shareholders later on if they like what we've got to do. We have recently completed a placement, raising 1.25 million, and we have a further rights issue, an entitlement offer, which is currently underway. That's been underwritten by Taylor Collisons out of Sydney, which has been a great vote of confidence. And we look forward to closing that and getting on with the job. We are an explorer, and our job is to find and create that value for our shareholders. May I have the next slide, please, Alex? Thank you. So let's dive right into what we actually have. Given that we do have some lithium projects, and with the lithium market being perpetually quite interesting, it's been quite a wild ride, and the metrics just seem to be still there. So we have moved to start assessing our lithium tenure, which has sat there for quite a while. So we have 4 lithium projects, which I'm going to concentrate on for this presentation and briefly touch upon our other projects. But we've got the Pilbara tenements, Lake Dundas and Mount Coughlan. If we just go to the next slide, please, Alex. Let's start down south. This is just a bit of an overview where we have Lake Dundas and Mount Coughlan. Both are lithium projects, and we recently just finished a drilling program over Lake Dundas. So could we please just go to the next slide? Now, Lake Dundas, this is quite an interesting one where we have a relatively old report, and it discusses quite a significant lithium result within this Salt Lake system. So we have gone off and drilled that area primarily to test the potential brine aspects, because in the center of this slide here, we have that lovely little chart here. And unfortunately, it's not very easy to see, so I need to edit this. But where that soil sampling result plots and where it could potentially be is that blue cross there, which is in amongst all the established lithium brine producers. So that's quite interesting there. So we've finished that drilling program. We've tested potential best bedrock sources. We're currently interpreting those, and everything's at the lab. So that has been very successful in a first pass, because this has not been touched for quite a while. So that is our Lake Dundas. If we can just move to the next one, please, Alex. Now, Mount Coughlan. Now, I haven't made many announcements about this. I've only been with Woomera now for 3 months, but I will be soon, because we went down there as a part of the Lake Dundas drilling, and it's an interesting area. We're 7 kilometres north of the Mount Coughlan lithium mine, a long strike, and we have quite a significant land holding here. So yes, we are there's not much I can say at this point in time, but it's quite exciting. It's in the right area. The mapping that has been done by the GSWA has been quite exciting. And so, yeah, please stay tuned on that one. Next slide, please, Alex. Now, the Pilbara tenements. These have, terribly sorry, it's got slightly distracted then. Yes, the Pilbara North and the Pilbara South tenements. The Southern tenement is still in application. We're expecting that to be resolved later this year, even though we are getting quite late into this year. However, we have completed some soils over the Pilbara North tenement. If we can just go to the next slide, please, Alex. This is an old map of the Magpie Ridge project, which is that Pilbara North, that Pilbara lithium tenement in the northern part there. There are some low order historical anomalism. We have completed quite a detailed soil sampling program over this project. And unfortunately, we're waiting for results for those. And that will be quite confirmatory of that and dictate our next steps. If we could just move to the next one there to round out the Pilbara. This is the southern tenement here, the Pilbara South lithium, and it's in application. Again, fantastic area to be exploring for lithium. Unfortunately, this is still in application, due to be out later this year. We are making, obviously, steps to get on the ground quite quickly out here, due to the fact that we're seeing quite, even though they are pegmatites, they are poorly formed. You can see on that photo on the left-hand side there that 300 metres north of the tenement boundary, there is these noted cropped out quartz veins, pegmatites. I wish they were a laminated quartz vein, that would be fantastic. But nevertheless, we as soon as that is approved, we will be on the ground out there assessing that tenement as well. So we are pushing our lithium projects forward. It's quite exciting. But I will caveat that, though, that they are still quite early stage. I think the Mount Coughlan tenement is incredibly prospective. Dundas is also as well. And the Pilbara lithium projects, we're in the right area. We've just got to do the work. So yes, next slide, please, Alex. Now, I'm going to quickly just go through the rest of our projects. The Wailu Dome joint venture project, Woomera entered into a joint venture with a private entity for the Wailu Dome project. We're earning 60% to spend a few $1 million over the next couple of years. However, there are some brilliant targets here. Not annotated on this map, but two prospects, the Golden Maramamba and New Morning, booming geophysical anomalies. We have made an announcement about that, so please refer to that. However, some historical drilling, 16 metres at 0.7 at New Morning, which is right down in the southeast. Golden Maramamba is pretty well central. And some spectacular rock chip samples have been taken around there, up to about 11.7 grams per tonne. Now, this project is well and truly over the Duck Creek Dolomite, which hosts Mount Olympus. So we have a lot of very positive indications about this project, and we're looking forward to progressing this one. Alex, may I just have the next slide, please? Mount Venn has been with Woomera for quite a while now. It's quite a mature project. We've had some really good success with this, with some significant intercepts over some quite broad areas. We've completed a lot of drilling. However, we're at that point now where we are doing a full review. There has been a lot of work done on this area, and we need to sit down and take stock and decide where to go next. We have some significant intercepts, 2 metres at 1.31% copper, relatively shallow, some decent nickel hits as well. So we need to make sure that our next program here is effective. So a lot of information, and we are currently going through that. Now, Alex, may I have the next slide, please? Musgraves. I won't talk too much about this one. This is quite a large package of ground within the Musgrave Trend. This is one of the original projects of Woomera and is incredibly prospective. Historical assays through some of the historical drilling through that area, 19 metres at 0.2% nickel. So whilst not spectacular, certainly proves that it's fertile. However, one interesting aspect is within South Australia, Rio Tinto has made quite a significant application around us there, which is lightly highlighted there. But we do have a geophysical survey planned for this one. Unfortunately, it's no longer the last quarter of 2022 due to a few weather events elsewhere. That's been pushed back to Q2 next year, unfortunately. But yes, looking forward to progressing the Musgrave project as well. And finally, Alex, can you just move to the next slide? Labyrinth. Labyrinth is another South Australian project where we have recently announced pretty well coincident gold and cerium, so the lanthanide series, rare earths, anomalism within this project. This image here is of gold. However, we have a lot here. There's a lot of information. We have some fantastic geophysics, we have some fantastic geochemistry, and we have some historical information. A historically CRA hole returned elevated copper and neodymium. I always get this one wrong. Neodymium, that one. Apologies. So yes, we have a drilling program to test these anomalies that you see in the northeastern corner there, not just for gold, but also those rare earths as well. Indiana Resources have done a fantastic job in this location of highlighting the prospectivity with regards to Trio in this area. We're smack bang in the middle of their work, and I'm looking forward to replicating a lot of the success that Brent Barnes has managed to do there. Alex, may I have the next slide? Now, this is a bit of a schedule of what we are doing between now and early next year. With Christmas and summer coming along, they are slightly stretched, as you can tell by the Musgrave VTEM survey. We've had to push that out, but we have a lot of work underway at the moment, and really looking forward to presenting those results. Alex, may I have the next slide? This is the investment case for Woomera. We've got some fantastic assets. Had some great exploration success. The geophysical survey at Wyloo was fantastic. And certainly with the soil geochemistry at Labyrinth with regards to rare earths, we're exploring. We will have consistent news flow. So that potential will be highlighted, and all our projects are very easy to get to. And my board's been there and done it before, the likes of Ian Gordon and Dave Richards and David Lind. These gentlemen have been within the industry for quite a while and have been quite successful, and we all want to replicate that. So thank you very much for your time. Thank you to everyone else that's presented, and thank you everyone that has heard. Tim, back over to you.
Thanks, Jason. There's a lot you've covered there. You almost seemed overwhelmed yourself, to be honest. I mean, you're talking.
It's exciting. It's exciting.
That said, you're talking gold, lithium, rare earths, nickel, and copper. Over thousands of kilometres in Australia. I get the sense you're overwhelmed. Where do you start?
Lithium. It's a lithium market at the moment. It is well sustained, well supported, and we have projects which are prospective for lithium. It's not to make light of the simplicity of it, but it made for an easy prioritisation of the work. Not to say that we're not doing anything elsewhere. We can multitask. So just elsewhere, like with Wyloo, we're progressing with the heritage surveys. So that stuff you can't exactly put up in neon lights and yell about. We're ticking those things over in the background, ensuring that we're able to attack these projects very, very quickly.
And you've only been in Woomera for 3 months or so as managing
That's correct,
director.
yes.
What's your background, and what do you bring to the table?
Okay. My background's, I'm a geologist through and through. My background has been exploration, greenfields exploration through to predominantly the feasibility study area, and I have jumped the fence a few times and gone over to the mine area. My commodity background is pretty similar to the swag of projects that we have at Woomera. However, it is being quite geographically diverse. A lot of time in Africa, a few stints in China and also Central America, and also coming back to Australia. So I have that multi-commodity experience and have seen a lot of projects go from exploration into that feasibility space. And luckily enough, been there to turn the keys at a mine site as well, a few mine sites, which has been exciting. And that's something I definitely want to replicate here.
And gold's been something that's been underperformed the last 12 months.
Oh, it has, hasn't it?
We've spoken about lithium.
Yeah.
Let's finish on gold. Where does that come into the equation?
Look, with the Wyloo Dome project that we have up in the Ashburton, this has been quite an unloved area for decades. And with the work that we have done today, it's collating a lot of the historical information, completing the geophysics, ground truthing a lot of these geophysics and rock chips, and having a look at some of the historical spore piles, the drilling through this area. It's to have prospects with booming geophysical anomalies with incredible smoke like New Morning of quite a significant intercept. It's 0.7 grams, but incredibly distal to the main anomaly. So very excited about that. Very excited about dealing with the PKKP up there, and showing that we are good operators. We're not just out there to pretty well just go and explore, but we're members of a community out there, and we want to be a part of that. So, and at the end of the day, create that wealth for our shareholders.
Okay, Jason, that's all we have time for. Thanks for your time. Good luck with the rights issue. Have a nice weekend.
You too. Thank you.
That's all we have time for, everyone. Hope to see you back next week. Thanks for your time.